Okay, Tuesday, 1st of August 2023, we're looking at the dollar index for the Asian range break trade. Asian range break slash silver bullet. Why? Because we get the Asian range break at the close of the 705, and it's a very clean, unambiguous break with a strong up candle at 705, which also coincides with the London open and the London silver bullet setup hour. So let's just go with 705. We're looking to short the dollar crosses, and just before I move on, you'll see that it was a very nice, in theory there should be a very nice clear uptrend, clear trades to be had on the dollar crosses. Okay, so this is pound dollar, and you'll see by 7 o'clock price is moving down. Now look at what's just happened. Prior to that, London has already taken the Asian high liquidity. Bear in mind it's Tuesday as well, so this is a very common scenario on Tuesdays. You get that liquidity take and the move down. The only question is, where will you take your entry from? Because what we have in front of us is a midnight open. If we just take the trade from here, you could take the trade from there, call it a 15 pip stop, and it did work out, keeping it simple. However, you're bearing in mind we're in the silver bullet hour. Okay, so ideally when you get the Asian range break to the upside, let's say on the dollar, what you're looking for is an Asian range break to the downside, which confirms it. We don't have that in this case, but what we do have is a liquidity take already behind us. Okay, so probably the best trade to take in this case, simply just fib it up. Okay, identify your premium, so you get a move into premium here, 1 minute liquidity take, and that becomes a very good trade with a lot of follow through. Excellent trade. The only thing is, where it becomes difficult is you're never 100% sure, was this the liquidity take, or are they going to come back one more time? You just don't know. So that's the risk you have to take. So that's why waiting for premium is the better trade, because if you do get stopped out, you're just losing 10 pips. Okay, euro yen, similar kind of thing. Look, we've had the liquidity take prior to us getting the signal on the dollar. So this is the downside of waiting for the dollar. So if you were just if you were just trading EU on its own or GU on its own, you could have started looking to get short from within here on a 1 minute after you see this liquidity take. But following our system, you're waiting for the dollar to give you the signal first, which happens here. So price has already moved down. We're already below midnight open. So the question then becomes, where do you take the trade? So although this was a good trade as well, this isn't like taking a trade just at the close of here isn't the best entry. You might want to wait for a break of Asian structure, which you get, at which point the trade then becomes tap back either to Asia, stop on the other side of Asia, that's 20 pips, or similar to the pound, you draw your structure. Okay, and that's not quite accurate, but you're basically looking for a premium above 50, which we get here. Small liquidity take. As soon as that goes down, you could enter there with your stop, either 15 or 20 pips away, and you at least get a 1-to-1. So that's euro dollar. Aussie dollar is actually the best. It's the easiest and cleanest setup of the three. Why? Because if we're trading this as a ARB, we've had dollar index go up, break its ARB high, which means what we want is Asian range low broken at 705, and we get that pretty much just about at 705. Where is your entry? It's just a tap back to here. Okay, tap back either to Asian range, you'd get that, or just here with your stop above there, and you'll see it's good continuation, easy 1-to-1 at least.